In this video, I want to show you the latest results in the portfolio calculator, how to measure the risk, how to see what the daily P&Ls are, and all the latest stats for our combined equity curve analysis, combined portfolios for Capstone Trading System. So this is the portfolio calculator. I'm going to show you first where you can download that. Go to the website, click on Market Portfolios, click on Download Portfolio Calculator. You can watch this tutorial. I might add this current video below that. And you can download the portfolio calculator updated through yesterday, February the 13th. And this is what you see when you download that. You can enable the content. You'll get a pop-up at the top, enable the content, and you can save it as, and you can save it directly on your computer so you can make changes to the portfolio setup itself. And then you can select which portfolio you want to use. You click on this drop-down menu and you scroll through these preset portfolios, or you can save it as, and I would just save it as a different file name. If you want to start typing in different values here, you can. It will. If you do that, then this drop-down menu won't work correctly. But what you can do is you can save this as the Capstone Portfolios Calculator February 13th, 2020, and then you could also save it as Capstone Portfolio Calculator February 13th, 2020 -scratch. And then you can just go through here and you can delete all these values and then type in your own numbers. But let's look at the preset values. For example, Stock Index Portfolio 2020 19 system variation. We released this at the end of 2019. It's at an equity peak. You see the current drawdown is 0. Let's look at some of the stats related to this. There's 19 strategies, but there's 23 contracts traded because 4 of the strategies trade 2 contracts. There's 146 months, 106 winning months, 40 losing months. You have maximum consecutive winning days is 17, maximum consecutive losing days is 10, maximum consecutive winning months is 9, maximum consecutive losing months is 3. These are historical values that could change and expand in the future. Largest losing day 8,900, largest winning day 28,907. Average annual profit is 69,360, average monthly profit 58,33. And so let's look at the results so far this year after releasing this. 14,407.50 in January, 49.10 in February, and 19,317.50 on the month. So if the month closed now and you multiply that times 6, you would get about 120K. And so nice start, stronger than average start so far this year. And we take a look at the drawdown curve, and I want to explain how the drawdown curves works, and I will do that in a minute. I also want to explain to you how you can get the daily P&Ls. So you go to the Calcs tab and you go all the way over to the CG column. If you don't know how Excel works, it starts with A, and then when you get to the end of the alphabet, it starts with AA, AB, AC, and so you're going to have to scroll quite a bit to see the total daily P&L numbers. And you can see that this week it was 1862.50 on Monday, minus 44.75 on Tuesday, 14.10 on Wednesday, 33.87.50 on Thursday. And when you highlight all these, Excel will do something for you. It will sum these up, and I want to show you where it sums it up. It's right down here at the bottom. You see plus 21.85 on the week. Now let's take a look at last week. And so, for example, if you summed up last week, you get 27.25, and you see 3 out of 5 days were losers, but you had a big winner. The previous week, 3 out of 5 days were losers, but 73.57. The week before that, I think it was a holiday week, only 1 winning day, 3 losing days, holiday week, because one of those is 0, and minus 33.57.50. So those are some numbers to look at, and you can scroll all the way up and see the results. And that's what you would do if you're looking at just the stock index portfolio. You can also look at the total profit over drawdown. This is the total profit right here, the summation of all the monthly gains here divided by the total months. And so there's 146 months so far. That's how you look at this portfolio. Now, if you want to look at a different setup, you click on the next setup. Stock Index Portfolio 2020, 38 strategies, 0 current drawdown, means it's at equity peak. And you see the stats updates. You can go through all the stats. Largest losing day, it's important to understand that. Largest winning day, important to understand that. The consecutive winning and losing streaks, those are also important. Capital required. And you can go down here and look at the equity curve, drawdown curve. These are stock index only strategies. So you see you don't have as much diversity as you would in some of the other portfolios where you have multiple strategies. So for example, I'm going to explain the drawdown curve to you. And the width of this drawdown is the length of the drawdown, the gray areas. So these are the lengths of the drawdowns, and you see those. And so these drawdown curves are more narrow and recover more quickly the more strategies and diversity that you have. And so for example, if an equity curve looked like this, then your drawdown curve would look like this. Here's the zero line. When it's at zero, it's at an equity peak because there's no drawdown. And so your drawdown curve is like this. You're right at zero. There could be some like little pullbacks in here. Nothing's that straight. It's just theoretically speaking. So you're at your zero line, and then it goes through a drawdown. It goes through a drawdown until it hits another equity peak over here. Here's where the equity peak, a new equity peak happens here. So we'll put that on the chart, and the low happens right down here, and so your drawdown curve would look like this. Then it starts to recover, and so for example, if this happened for 1 month, say this is a 1 month period that you had a drawdown, then the next month it started to recover. This is a winning month. Say this was a 3 month period. 1 month, 2 months, 3 months. The drawdown lasted 3 months, but during that 3 month period, it took 3 months to completely recover, but you could still have a drawdown that lasts a month, and then your recovery could last 2 months. So this might encompass only 1 losing month, even though you're in a 3 month drawdown. It's important to understand that when you look at the monthly wins and losses, that's not, if you see only 1 losing month in a row, for example, that doesn't mean you're underwater for just 1 month in a row. You could be underwater for longer. So you have a losing month, and then you start to recover, and you have a winning month, and you have another winning month, and then finally you have an equity peak. So that would explain the drawdown curve in the risk analysis. So then your equity peaks again right here, and so you're at equity peaks. This equity curve is not straight line, but represents a frequent equity curve. So I didn't line it up straightly, so I'm going to just do a little diagonal line here. And so then you go into another drawdown right here. That represents this low point right here. This represents the low point in the drawdown. And then you start to recover, and you're at equity peaks up here once again. And so that would represent this line. Boom. So then your equity peaks here. So you can be underwater longer than the consecutive number of losing months, as far as from your previous equity peak. So that's important to understand. I wanted to explain that drawdown curve and make sure you understand that. Let's look at the all 74 strategy. So let's scroll up. We've looked at the I'm going to actually look at the 200K portfolio and the 100K portfolio and the all 74 strategies. So this is 85-45, largest losing day in the past, 15,000, 82.50, almost 30,000 for the largest winning day, and you can see all the stats related to that. You can see this drawdown curve. Let's let that update. So it's updating still. So this has, you can see how the drawdown curves on this 200K portfolio, because it includes more markets and more diversity, they're narrower. You don't have the wider drawdown curves that say just the stock index portfolio has. And so let's look at the day trade portfolio now. This is the 200K. It includes day trades and swing trades, but if you just want day trade strategies, you're going to get wider drawdown curves, because you lose diversity when you don't trade swing trades. It only has $18,000 drawdown, and it does have a 64.26 total profit over drawdown. But let's take a look here. You get some wider drawdown curves on this. And so you see some wider drawdown. This is wide, this is wide, this is wide, but fairly shallow, $10,000. and then you get a fast one here, and then a recovery, and then lately it's been just hitting equity peaks. When it's right up here and you see shallow drawdowns and lots of blue, it's hitting equity peaks, lots of dark blue instead of gray. So that is the 100K day trade portfolio with less diversity. It does have a small drawdown. Let's look at the all 74 strategy. If you trade all 74 of these strategies in the all strategy access, let's see here. 36,233, 21,000, largest losing day. If you trade all of them, largest winning day, 37.7, and 68.31 is the total profit over the drawdown. Let's take a look at the results. 32,000 in January, 12,000 in February, and let's see. Here is the drawdown curve, and you see once again quick recoveries. But you've got to be comfortable with $30,000 drawdowns, quick $30,000 drawdowns. And so you see, let's see, I need the pin for that, not the box. Alright, so I'm going to add the pin back, and you can see these quick $30,000 drawdowns. Boom. These are quick spikes, so if you can't handle quick $30,000 drawdowns on a $225,000 account, then you shouldn't trade those. These are at the $20,000 to $25,000 level, but they're narrow. You know, they're narrow. So that is the risk assessment and analysis of how to look at combined equity curve analysis, looking at the risks on these when you trade all these strategies together. And having a roadmap of expectations is extremely important. Knowing what your risk tolerance is and knowing which strategies, which setups you should trade should depend on your risk tolerance. Many people don't know their risk tolerance. Many people think they can handle certain drawdowns and they can't. So just make sure you know you can trade. You know, $36,000 drawdown is a, you know, closing in on a 20%. That's about 15% drawdown, but you're closing in on a 20% drawdown. And so one of the things you can do also is you can wait for a drawdown to start. I encourage clients to, if they're starting, to wait for a drawdown. You know, $10,000 drawdown, jump in. So that's the opportunity that's there. So that is the risk analysis and assessment for taking a look at some of these portfolios. You can always add more capital if you want to do it on a percentage basis. You know, $500,000 account could trade this, and it would be an 18% drawdown. I'm sorry, not an 18%. It would be about a 7% drawdown. I was thinking in terms of a 200K account. So in terms of a 200K account, it would be about an 18% drawdown. And so 7% drawdown on a 500K account, a 3.5% drawdown on a 3.6% drawdown on a $1 million account. And so you can obviously add more capital. For example, if you traded this with $1 million, these are some nice returns on the year on a $1 million account if you're more conservative. So that's how you assess risk. That's how you take a look at portfolio analysis and risk assessments.